Hi everyone, welcome back to Upside Down Data. Today I want to talk about Bitcoin and the recent all-time high I put in and what our risk indicator has to say about that. So if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter where we post regular updates about our risk indicators and more. Alright, so if you've been following the channel, you're probably familiar with charts like this, but in brief, what I'm showing you here is the price of Bitcoin over time, and then the price in the logarithmic form, and then the dots are color-coded to our risk model output. So our risk model is called the Upside Downside Potential Indicator, UDPI. 5 means high risk, -5 means low risk. So over history, what you can see is that our risk model has been pretty good at identifying these overheated points in the market, these risky points, and good at identifying these low risk points, these kind of bear market points where historically buying in at those points had been advantageous. So what I want to talk about today is what does our model think about the new all-time high that Bitcoin just put in this week? You know, Bitcoin was able to go up into 66K, break its previous all-time high back in the spring, which was a little over 64K. And there have been a lot of different narratives that have been emerging about this all-time high. A lot of it bullish, but also some of it bearish. And so I wanted to talk about how we can interpret some of those narratives from the context of our risk model. What it has to say is more likely. So for the kind of the bearish case, what's kind of been happening especially on crypto Twitter, is all throughout this run that we've had out of the summer, there have been a lot of people who have just been continuously saying that it's all a trap, you know, that the price is a dead cat bounce, you know, price is going to reverse and we're going to go into this massive bear market, you know, Bitcoin's going to fall to 10K, you know, it's all gloom and doom, get out now. That's this kind of prevailing bearish narrative. And what's kind of ironic for those narratives is they keep kind of redefining what they think is going to happen. They kind of keep redrawing their line. So when we had that flash crash in the middle of September, that's when they were saying, all right, the dead cat bounce is over. We're going to go crash. But sure enough, then we go and we put an all-time high again. So the current narrative that they're trying to hold on to, that the bears are trying to promote, is this idea of this double top. They're saying that we're going to top out again at the same point. Though technically they were saying that we weren't supposed to put an all-time high, so they've already kind of invalidated themselves. But putting that aside for now, they said we're going to have this double top, and then price is going to crash back off of that. So what does the UDPI say about that idea? Does it think that's likely, or does the UDPI say that's probably kind of a ridiculous thing to be thinking about the market right now? So I'm going to show you the raw UDPI output here, because I think that'll help kind of illustrate the point I want to make a little bit better. And what I think is notable about the UDPI output over the last few weeks here is it's not really been reacting all that much. It's kind of just yawning. It's saying, I don't really care too much if Bitcoin's, you know, at 50K, if it went up to 66K. Like, who cares that it just put a new all-time high? And the macro scale, nothing has changed. Bitcoin still has a ton of upside potential to realize. There's really nothing about the risk indicator right now saying that we've put in a double top. You know, historically with Bitcoin, when we've actually had one of those tops where we lead into this massive crashes down into bear markets, or in this case, the kind of mini bear market in the summer, it's always come from these really high risk zones. You know, it was always when we've kind of tapped out the upside potential for Bitcoin, and then it kind of crashes down into the low side. And we just haven't seen that right now. You know, with this move out of the summer, we've not hit these really high risk zones on the UDPI. We've only gotten, you know, a bit above 1. We kind of came back down as price fell off of the flash crash that we had in September, and it's just been kind of consolidating down here ever since. That the risk indicator has just kind of been hanging out here a little bit below 1 for quite a while now. And so in some ways I think this is really bullish, actually. The fact that we just put in an all-time high, we just broke the all-time high from the spring, and the risk indicator just kind of was like, not that big of a deal. There's still tons of upside potential left. I think that's really bullish, and that might suggest that we haven't even gotten close to what the all-time high will end up being for the end of this market cycle for Bitcoin. Now again, none of that's financial advice, but this is just my interpretation of what the model is telling us right now. It's saying that with all this fear that's being put out there, with all these bearish narratives people are trying to push, the model just doesn't really seem to believe that. It does not think that we've hit some unsustainable point like we were at in the spring, or like we were at these other market cycle tops that led to massive bear markets. We just haven't gotten anywhere near those levels yet. And so my personal view, what I kind of expect is I think that it's much more likely that Bitcoin will continue to rise in price and that eventually the UDPI will rise up into these higher level risk zones, and that's when we'll have the actual market cycle top. Once the risk level gets up to these points, then I would become bearish, and I would expect that there'd be the crash could be incoming, because historically that's always been the case. But from here, I just really don't think that's very likely. Now, if you wanted to, you could always go back to 2019 and say, well, what about this? We got to the same risk level, and then we crashed all the way back down. But you have to remember that you have to take this all in context. The market was in a very different place back in 2019 than where it is today. We didn't have this big moves in by institutional investors. This was kind of this very fast, unsustainable move. We did not put in a new all-time high in 2019. We did not get back up to the price levels we saw in 2018, and then we crashed. There's never been a point in Bitcoin's history where we put in a new all-time high and then not gone up to these really high risk zones. Not to say that can't happen, there's always a first time for everything, but it would be historically surprising if now that we put in a new all-time high, we don't get price to move up quite substantially to move us up into these higher level risk zones. Again, not to say that that has to happen, nothing has to happen. Technically it's possible that we could crash way back down. It's just that, from my interpretation, I don't think that's very likely. I think it's much more likely that Bitcoin will realize more of this upside potential before it crashes, rather than just falling away from where we are right now. And that's one of the things I think is really useful about having an indicator like the UDPI to look at, is it lets you cut through that noise, cut through all those different narratives people are putting out there and say, okay, what does the data actually tell us? Have market conditions changed notably from where we were a week ago? If there was no reason to freak out a week ago, basically the UDPI is saying there's no reason to freak out now. Things just haven't changed on a macro scale. There's nothing to be concerned about relative to where we were just a little bit ago. And so don't get too, when Bitcoin just recently pulled back from 66K down to 60K, a lot of people are getting really fearful. Again, the UDPI says, why? Why are you getting fearful? Nothing's really changed. There's nothing really to be concerned about right now. The market conditions are basically the same as they were before. So it's just basically saying, calm down, don't worry about it. It's not going to be that big of a deal. Now again, that's what the model is saying. Obviously with Bitcoin can do whatever it wants. So you can never be too definitive about anything. But in the context of the model and what's saying, in my interpretation, it's just not a big deal. It's not really something to be too worried about. So let's just take another look at what the model is currently saying about Bitcoin. So this is the current level as I record today. It's at 0.8. So it is a little bit higher than it had been about a week ago, but not much. If you look at the past 30 days of the UDPI, it's basically just saying that market conditions have been in a largely similar place throughout this period. So there's been some volatility in price, but really the upside potential that Bitcoin hasn't really moved all that much. So risk level has gone up slightly, so it's realized a little bit of that upside potential moving to its all-time high, but there's still tons of more room to go there. And so this is no reason to be thinking we're about to crash down to 10K or anything like that. And there's really no reason to think this is some kind of double top that's really unsustainable, at least from the perspective of this model. Now, of course, anything's possible, but if I were to have to kind of put my expectation in one direction or the other, I would say I think we have a lot more room to move to the upside before we're going to see one of those massive crashes. All right, well, thanks for watching the video. Again, if you like the content, remember to subscribe, give the video a like, and give us a follow on Twitter. And of course, with the UDPI, we're all going to make it.